Good morning, good afternoon, good evening, and welcome from around the world. This presentation is going to take you through the live signals performance of our February vintage of our Fast 50 US equities pairs. And that's from the 31st of January when they were launched live until the 31st of March, which is just a few days ago. So first off, for those of you who are new to pair trading, and more specifically pair trading stocks, and in this case US stocks, why do you want to do that? Well, first off, if you're worried about any of these things, rising interest rates, inflation, recession, unemployment, stagflation, investment earnings, a market crash, well, don't be. Why? Because instead of worrying about all of those things in a traditional investment portfolio, you can use stock pair trading to profit from market volatility instead of being worried about market volatility. You can hedge against market risk and a big account drawdown. You can generate consistent monthly trading returns. In short, you can just stop worrying about Mr. Market. And how do we know these sorts of things work? Well, look, here's a quote from a recent pair trading study done called Pairs Trading and Selection Methods, Is Co-Integration Superior? And they concluded in this study that robust pairs trading strategies are the following: co-integration for pair selection. Returns are especially high with monthly excess returns, i.e. returns above the market return, including transaction costs, so after costs have been taken out, greater than 1.38% per month and going up to almost 5% per month over a period of more than 10 years. So that's a pretty extraordinary finding. So that's one of the key reasons why you want to pair trade stocks. So can we prove it? A lot of people talk about making money in the markets and strategies that are successful at doing so. Besides the exhaustive academic research that demonstrates the profitability of this trading strategy, and in that regard, we would like to point you towards our blog, blog.pairtradefinder.com, where you can find pair trading research. And here we have a library of many of the studies that have been done over the last 10 to 20 years demonstrating the profitability of this strategy, as well as many different types of strategies that allow you to find your edge when trading. Let's get back to this. So how about, as proof, the last 2 months of live signals results out of sample that were available for trading from a group of 50 US stock pairs that we chose at the end of January. So had you used these pairs, which you can auto-load into your PairTrade Finder Pro, you would have had 24 closed trades, 19 winners, a 79% win rate, 0.8 times average reward to risk. That equated to an 11.1% net return in 2 months, or about 5.4% average per month. Let us show you what we're talking about. So first off, who are we? We are PairTrade Finder. And over here on the right, you'll see a screenshot of our award-winning software. It was created over 13 years ago. It's been downloaded by thousands of traders, both institutional and retail. And what does it do? Well, it helps you very easily find great pairs of securities to trade, whether equities, ETFs, CFDs, futures, or FX, or crypto as well. So it's designed to allow any investor or trader to learn to make winning long-short trades consistently, and most importantly, from our point of view, with controlled and measured risk. It offers a suite of professional advantages to help you level the playing field with institutional traders. And most importantly, we think there are 2 elements of the pair trading strategy you really need to take on board. First off, it can protect you in the event of a market meltdown, so you can stop worrying about the stock market crashing. And then second off, a lot of strategies only work in one type of market, either a rising market, a falling market, or a sideways market. Pair trading works in all markets: bull markets, bear markets, and sideways markets. So with pair trading, it just doesn't matter the market conditions. You can always look for opportunities to make money. So what can we do for you? Well, first and foremost, we make pair trading stocks easy. And so besides our video training course, our tutorial videos, the Trade of the Month blogs that we do every month, and our ebook where we've distilled some of the top secrets of professional pair traders, we do the hard work for you to learn to become a consistently profitable pair trader. And what do we mean by that, doing all the hard work? Well, besides creating the software, we also handpick and then allow you as new subscribers to auto-load into PairTrade Finder Pro 50 of our top stock pairs. And these pairs will generate immediate trading signals for you to review as soon as you subscribe to the service and load them into your software. And we call these 50 pairs the Fast 50. PTF Pro will then semi-auto trade these signals directly into Interactive Brokers Trader Workstation, or if you prefer and want to use a different broker, you can receive the signals by email and trade them into any brokerage account you use. So again, what's it all about? It's a curated set of 50 USA stock pairs. And how do we do it? Well, we generate them after hundreds of hours of backtesting, profitability filtering, and fundamental screening of over 2,200 companies. We do the hard work for you. And if you really want to understand that in detail, jump over to our blog.pairtradefinder.com, and we'll show you in detail, for example here, all of the filters we use, selection criteria, backtesting parameters, and filters we use in order to come up with the Fast 50. And we have a video on that as well. So you'd subscribe to PairTrade Finder Pro. These are then auto-loaded into the software for you when you subscribe. And the latest vintage, which is the February 22 vintage, launched on 31st January. So how did they do? Well, before we jump into how they did in live trading, let's talk about how they did using all the powerful backtesting capability of our software. So this is the last year, 1 year in-sample backtest results of this February 22 vintage Fast 50 US equities pairs. Won't go through all of it in detail, but I will say some of the highlights here. So there were over 128 trades. There was 35,973 total net profit on an assumed account size required of $35,000. You were using 4-to-1 leverage, CFD leverage, and you were using IB parameters for trading, commissions and slippage, and margin rates. So what did that equate to? Well, it equated to a 97% win rate, 3.7 times reward risk. You doubled the account in a year, so over 100% in a year, which is about 6.6% per month. So amazing, fabulous backtest. But as we know, backtest is not always reality. So how did they do in live trading? This Fast 50 vintage, over the last 2 months, had you traded each of the signals as they arose, you would have had the following performance. This column over here on the right. So you would have needed an assumed account size of about 30,000 in order to trade these. That includes margin headroom. You would have had 24 exited trades. The total net profit after commission slippage and margin interest was 3,333. That equated to 11.1% on your account size. That's about 5.4% per month, and that equates to about 88% per annum. That compares to the backtest, where it delivered over 100% per annum and 6.6% per month. But we are very proud and happy with the performance of these out-of-sample live signals from our backtesting. So the winners were 19. There were 5 losers. Our win rate was 79%, about 80%, which is not bad at all, depending on what your average reward risk is. And our average reward risk was 0.8 times. So 80% winners, and you're almost 1-to-1 reward to risk. That's where you get this phenomenal profitability, 5.4% per month. Importantly, what we would highlight here is while the winners and the average wins were very similar between the backtest and the live trading, what you did find in live trading is you do have larger losses. The average loss was negative $355 versus negative $80 in the backtest. And that's because no matter how much you fight against it, there is some bias in selection when you're doing the backtest. And anytime there were price shocks in the past, and we did a 2-year backtest on these, and you'll recall that the market crashed in 2020, intrinsically be selecting pairs that were on the right side of that market shock. So what you're seeing when you go into live trading is a bit more balanced results. You're getting higher losses but similar wins, and that's giving you sort of about a 0.81 times reward to risk. The days in trade, longest and shortest trades were almost identical. And importantly, when you're looking at these performance results, you want to benchmark those against, for example, had you been long the S&P 500. And had you been long the S&P 500 in that period, you had an average monthly return of 1.2%. That includes dividends. There was a dividend on the SPY ETF in that period. So you generated 4.2% of alpha per month by trading our Fast 50 live signals. You could say that's all well and good, but maybe it's just a fluke. We don't publish the results of our Fast 50 all the time, but we do it, on a reasonably regular basis. And as we said previously, in-sample backtests are great, but out-of-sample live signal results generally tend to deliver only about 50% of backtest results. Another important thing we want to highlight here: when we pair trade ourselves, we don't trade the raw signals. we filter these. We want to take out any event where there was news that affected the fundamental value of one of the two equities. So if a CEO resigned, or if there was a scandal, or if there's a big spin-off happening, an equity issuance on one of the tickers in the pair, we would avoid it. You also want to avoid trading through earnings announcements. So those are filters that we put in, which hopefully and ostensibly would improve the results over just the raw signals. Nevertheless, the performance of the raw signals, whenever we've looked at them on our Fast 50, has been impressive when measured. So here are 3 different blog postings you can go to on our blog. But 3 other times we've measured these. One of them we had plus 17.3% in the first 8 weeks. Another we had plus 9.3% in 5 weeks. Another 11.6% in 3 weeks. That was in the big volatility in the market crash in 2020. Delivered amazing returns from pair trading. So with those kind of results, we obviously must have a lot of really happy customers. Well, what do our customers say about PTF Pro and our Fast 50 curated stock pair? Marcel Weiss, he says, I used to manage a prop firm in the 80s. We had over 1,000 traders. We did a lot of pair work back then. You have an excellent program. I've been testing your top 50 pairs for about a month or so, and it is doing quite well. Then down here, Jack Ovray, I started trading the strategy in September on a Collective 2 account, and I also traded the strategy on my own account at IB in October. I'm just glad to say that the strategy performs as expected. Backtest equals real time. That's really, really impressive, and we're very happy to see when our signals can actually match the backtest. Les Koziol over here, this is the kind of thing that makes us really happy. He says, just to say how delighted I am with your product. For the first time in 10 years, I am consistently profitable. If I can sort out my discipline, that the results would be even better. Yours eternally grateful. So yes, we have a lot of happy customers. So just a little bit of food for thought. It might be a bit disingenuous to present a slide like this, because achieving a 5.4% monthly return every month is maybe not realistic. You're going to have down months. You're going to have months that are higher than that. But let's just do a little mental arithmetic to show you what that kind of power of compounding can achieve. So if you were to return 5.4% a month, start the year with 30,000, you would end the year with 56,442. And were you to keep that money in your account and keep trading and compounding at that rate, these are the balances of your hypothetical account at the end of each of the years. And by the end of year 10, if you fully compounded and hit that kind of return, you would be at this level, over $16.67 million. Now, on a $30,000 start. The reason we highlight this is just to show you the power of return compounding. So we want to show you that if you were to adopt pair trading into your activity set, your skill set in your life, you can do this in as little as 1 hour per day, often much less, because if there are no signals called, you have no work to do that day. And you have to do it consistently. There are 252 trading days a year, so you have to look at the market. And if there's something to do, you have to do it. But it's usually far less than an hour a day. And once you've learned your craft, it becomes easier and easier. So if you were to adopt this sort of thing and can achieve consistent monthly trading returns, the compounding factor can help you generate wealth. Here are the appendices. I'm going to highlight them because it's very important that you see and understand how we calculate our numbers. We're fully transparent on this. So this is how we go about figuring out the capacity we need in this theoretical account size in order to trade the signals. It needed 30,000. Here we show the open P&L of 6 trades as of the end of March when we took this snapshot. So not only did you have 24 closed trades, you had 6 open trades. That's the P&L of the net of all of that. And of course, we calculated the margin interest that you would have to pay over that time. And so that's how we came up with the numbers you saw previously. In this appendix, we'll show you exactly all of the closed trades during each of the days in the period we're talking about, the 2 months. Here's the total, 3,446 before margin interest. And then we will show you here the 6 open trades and their P&L as of the close of the market on March 31st. So that's how we generate all the numbers in this presentation. Just a quick disclaimer, all trading involves a lot of risk. It may not be appropriate to you in your financial circumstances. We're not giving any financial advice. Everything you see in this presentation is for educational purposes only. It's your money, your risk. Please read this and trade accordingly. Thank you very much, everybody. Have a great day and happy trading.